Nicholas, thank you very much for being here with us. So you had a really nice quarter here. What would you say drove the quarter? Was it just the price of nat gas? Is it that simple?
Hey, Courtney, good morning. Thanks for having us. It's actually going back to sort of the basis of our business. We're a manufacturer in the end. And if you're a manufacturer, you want to be the low-cost producer, and you want to operate efficiently. If you can do that, and on top of that, hedge forward the pricing that you're going to receive in the future for your product, which we do systematically, then you're in a position to enjoy some pretty healthy margins. And that's what we saw last quarter.
Very nice. Obviously, energy is in focus around the world. Europe kind of going through an energy crisis of sorts with prices really soaring. What's going on there? And in your opinion, do you see that abating anytime soon?
So what's going on there, I would sum up, and this is the world over, as you indicated, it's supply and demand like we've always seen with a new twist. So on one side, with the demand, it's going to be very weather dependent, GDP dependent, as it's always been. And as we all know, weather is very difficult to predict 40 days out, let alone a year out or further. So there's this demand uncertainty. And if you have a very cold winter, that's going to spike demand for the product. If you have a mild winter, the opposite is true. On the supply side, things are evolving. And what's evolving there is that the industry, the natural gas industry at large, is facing some ability or inability to respond quickly to supply in the short term. Some of that is because of capital markets wanting to see that buzzword discipline applied across the space. Some of it is because of policy where natural gas fields have been shuttered, particularly in Europe. So the supply side, and some of it, frankly, is labor driven, where the ability to get men and women to staff and man the rigs and the completion crews, et cetera, is going to be somewhat limited in the short term. So there's a supply response that is basically slowed over the past couple of years, some of it because of policy. But this new twist between supply and demand goes back to what I would call, for lack of a better term, the plumbing, the infrastructure to get the widget, the molecule of methane from, say, Western Pennsylvania, where we're at here in Pittsburgh, to the Southeast United States, or to export via liquefied natural gas to places like Poland or Western Europe or India or Japan. That plumbing that I'm referencing is the pipeline infrastructure and everything associated with it, where there's been a lot of deferral, deterring, and frankly, trying to strangle investment in that area. So when GDP is growing or when weather is changing and demand is spiking, the ability, in part because of supply response time, but also in part because of the plumbing infrastructure to deliver that widget, that molecule of methane from where it's being manufactured efficiently to where it's in demand, is changing. And what you see in areas like Europe or the UK recently, or in what's going on with respect to China or Asia, or potentially even in this country, when that demand grows, the ability to respond with affordable, reliable energy via natural gas, it's going to be different than what it was historically, and different, I believe, in not a good way.
And so then that does bring us back to the United States here, and of course, expectations that you have for this winter. What do you think prices are going to look like? What do you think that supply and demand equation will look like right here in the United States for natural gas?
Well, we've seen a tremendous amount of volatility. If I look at the forward price for winter at 10 o'clock in the morning, I can't rest assured by the end of the day, it's going to be roughly in the same arena. It changes so drastically, even intraday. And what that reflects is what we just discussed. It's that inherent increased volatility. So our view for winter is, A, it's impossible to predict. So if I can't predict what winter's going to look like because of the inability to predict weather, I can't predict what 22 or 23 is going to look like on a calendar basis either, which is why we hedge. We want to take that uncertainty off the table. And you can do that if you're a low-cost producer because you'll have a great margin. But I would go back to looking at those fundamentals and particularly, looking at winter of this year. What's weather going to do? We're going to have, if we have a milder than normal winter, I think we're going to be awash in natural gas and price will drop. If we're going to have a colder than normal winter, and I'm talking about the United States here, we're going to see some very interesting times when it comes not just to pricing, but potentially availability and reliability of things like electricity, which natural gas is basically a driver of.